Hey guys, Louis, what's up? Welcome in. Prax, hello. John, Alex, welcome. We're about to get started here in a minute. I'm just letting some other people join in. Can you guys see my screen okay, and can you hear me all right? Are we good to go on the audio and visual? Awesome. All right, so we're right on time here. I'm going to go ahead and get this thing started. Welcome to this week's Watchlist review session with Spartan Trades. If you are new to these sessions, I'm just going to be talking about the overall market, generally just from a technical standpoint. I'm going to mention some trade ideas that I have for myself and for the team for tomorrow. And then I'm going to give you some charts that I have alerts set on for the rest of the week. Those will be, we're just going to call those side charts. And if the alerts go off, there's a potential play. If they don't go off, then maybe there's, the play's just not ready yet. At the end of this session, I'll be answering any questions that you have. So you can ask questions anytime using the live chat box right here. I'm just not going to be able to check them until the end of the session, but I will try to answer everything that you guys ask. Just as an FYI, this is not financial advice, and I'm not a financial advisor. I feel the need to say that now that we're doing these YouTube videos, because I don't want to be responsible for anybody losing money, right? Any trade that you take is your responsibility. So just know that this is not something that, you should never follow anybody's trades blindly. You should definitely always understand what you're getting into and do your own due diligence. What I have pulled up here is /ES, right? So /ES, I'm on the daily chart time frame. This is actually I rarely say this, but this is a really boring chart. Look at the past 10 trading days, 2 weeks basically. It's just been moving sideways, so a lot of consolidation right here. I feel as if this is the time that a lot of traders quit trading, or they decide that trading is not for them, because during these times they try to either trade too large or try to force trades that aren't there, or get bored with the market. And all of that kind of results in someone losing money and then getting discouraged and then quitting. Don't be that person. If you're serious about trading, you really need to learn how to recognize opportunity, and then recognize on the flip side of that when there isn't any opportunity. It's okay to not trade. I've had days this past week, in fact, where I've put out a watch list and then I just didn't trade anything. It's okay to not find anything worth trading. And in fact, with me putting out the watch list the past few trading days, some of you may have noticed, at least the ones that are in the server, you may have noticed, there's only like 3 stocks on the watch list. And that's because I haven't seen much that is worth taking a trade on, right? And some of the newer traders may perceive this as being lazy, but they also may not have experienced a market that is hot. So during times like this, where we have longer or extended periods of consolidation, I want you all to try to think back and remember the first few weeks of 2021, right? When everybody came back from that holiday period, the first few weeks in January, the market was hot. Trading was hot. Everybody was making money. Stocks were breaking out everywhere and following through on pattern breakouts, kind of just like we thought they would. And that was such a time of opportunity. The market will get back to that point eventually. It always does. But right now is just a cool-off phase. You can't just have something going up all the time and breaking out all the time. There has to be periods of time where you take a step back and let the market cool off or catch up, and then you get back into that groove again. So there is a big importance, or you should have a lot of emphasis on learning how to differentiate between market sentiments and then adjust your position sizing and mindset accordingly. So enough about that. The market is just consolidating. All that it kind of leads up to is that there's not a lot to review tonight. The market's moving sideways, and until we break this range right here, there's just not a lot for me to really, truly go over. I do have support right here at 38.80, right? So that's what this trend line is. I'm going to draw resistance up here at 39.40. And then there's our range, right? So we're basically trying to encompass the majority of this price action right here, without regard to that one wick. And we're saying that this week, all that we're looking for is a break of that range, right? So either a break out to test the highs or a failure to break out and, we roll over and pull back a little bit. All right, so those two levels will be 38.80 and 39.40. Those are the two price points that you will want to watch for /ES heading into this week. Very easy analysis there. As for the watch list, these are in no particular order, by the way. The first one that we're going to be watching is Snapchat, SNAP. This made the side chart watch list on Friday for a break of this bull flag pattern that was forming here, right? So you see your volume coming in on the flagpole, and then here's your extended flag kind of on lower volume there, and then you get a breakout of the flag of this downward trend line on higher volume. That's what you want to see, and a move into the highs. So the analysis here is kind of like /ES. It's really easy. We're just looking for a continuation play into the highs. So this will be a long idea over $66. I think this is more of a bullish setup, so I'm not really interested in shorting something like this. But if I were to short it, I'd probably place that short trigger right there at $64. You could move that up depending on if you don't mind a little bit more risk. I like to kind of set my triggers at safer levels. So I think $64 is the safer bet to the downside. But you could move this up to like 65 if you wanted to, or you could say, if this rejects $66, you could take a short position up there. Totally up to you how you want to trade it. But I'm going to set mine at 64 and 66. By the way, these levels that I'm giving you now are just guidance levels. They tend to change by morning, and they usually do change by the morning to account for the market moves overnight. But just know that these levels aren't really set in stone right now, right? Use them as guidance or reference points for now, and then just know you're going to probably have to adjust them in the morning. But Snapchat, first one that we're looking for, or the first trade that we're looking for, will be a long idea over 66 to continue this bull flag breakout into the highs. Very easy analysis. The second one on the watch list is Boeing. I know that so the chart looks good, but I know that they just recently had some news with that with the plane engine losing pieces over Denver. That may or may not affect the stock price. It's likely to, but as of right now, I can't tell that news is going to affect the stock price. So I'm gonna just continue to put this on the watch list because it's still presenting a decent setup from what we're seeing right here. But if the stock price falls in the morning and it's not opening up near 218, then we probably just are going to take it right off the watch list. But here's the deal. So we were looking for the break of this downward trend line. We got that. I think we had traded it a couple of times up into this, up into these highs and looking for the continuation. And then it started to pull back and kind of bounce around. And so it's kind of doing what the overall market is doing, where it's now built a range here with general support around 208 and then general resistance around 218, right? So if I were to draw two trend lines, that's what it would look like, encompassing this price action right here. So all that we're looking for is the same thing that we're looking for on /ES, is a break of this range to the top side for a continuation play up. I like that it's consolidating over the 50 and 200 EMA, and I like where it closed at on Friday. But like I said, you know, if this news with that engine failure over Denver really affects the stock price, and let's say that this delete that. Let's say that this opens up lower than, I don't know, like 213 or something, then I would, you know, I'd be less inclined to put it on the watch list. And the reason why I said 213, I mean, that's not like a really random level, right? If I were to draw where the midway point is between 208 and 218, 213 is like, you know, it's almost right in the middle, and then you have, you know, resistance, support, a bunch of consolidation, and then a drop, and then a little bit of support and resistance right here as well. So 213 would be that's like the cutoff point. If it opens up below that, I'm not interested in putting it on the watch list. Right? Cool. So yeah, but the play that we're looking for right now is a long over 218, maybe even 219 if it gaps up. Who knows? I've seen news before that I thought was bearish come out on a stock, and then the stock gaps up, and I'm like, okay, this makes no sense, but I can't say that I'm surprised, right? Market moves like that sometimes. All right, the last one for the main chart watch list is PLTR, and I'm going to get into some side charts, so don't leave after I review this one. PLTR was one that was put on the watch list on Friday for, you know, we were looking for the break of the downtrend. It was sold off pretty aggressively and had its first little green day and had actually gapped up pre-market, right? And then so we got this nice move here into up to the highs of about $30. Okay, so after hours, it closed near 29. And then after hours, it moved back up to 30. So I'm going to go back to the daily chart and show you why this is a good thing for us. So $30. I talk about this in multiple streams when I go live. I talk about the whole numbers being likely levels of support and resistance, and usually I'm referring to like $50 or $100. Well, PLTR is not traded at those price points, right? It's traded at it's only traded at 45 at the high, but $30 is where it's currently at. So $50 and $100 being whole number reference points, they're not relevant. But what I can talk about is all of the whole numbers that it has hit on the way up, right? So what I'm going to do is adjust these trend lines. Look at where it had its first, not its first bit of consolidation, but it had a bit of consolidation here below $20, right? And then it moved up, and then what was the next big level for it to break over? This line right here that happens to be $30, and then it pushed up and formed a double top pattern just under what number? $40. So every $10 is also a likely level of resistance, right? That is still a whole number. It's just not the big levels, you know, the $50 or $100 marks, because the stock price isn't that high. So first of all, we have a break of the whole number at 30. Secondly, there is a small gap here over 30.5 up to about 31.5 that has yet to be filled. So there is a chance for this to break over, if it can get over $30 and 30.5, there's a chance for it to fill that gap fairly quickly up to about 31.5. The reason why gap areas work well is because there is little to no price action right here. So where is the resistance and support in this area, right? There's little to none. So it can move quickly once it enters into that gap area. Plus, at that time, we would kind of then be seeing a break of a downward trend line. We're kind of already getting that, but the rule with these downward trend lines is that you want to wait for the first rally before you can really draw yourself a trend line break. So here's a good example. We wouldn't say that we're breaking the trend line here because we didn't wait for that first rally to form. So this would look more like this, right? Because there's our first rally, we connected point to point. There's our second rally, then we got a break of the trend line right there. Do you see how that works? All right, so we can't really say that it's a break of the trend line yet, but if we start to get up and over that price point at 30.5 and fill this gap, then it's, you know, more likely. So PLTR is a long idea right now over $30. However, you need to know that the gap area is still at 30.5. So if it opens up over 30, we're looking for the move over 30.5 for the move up to 31 or 31.5. I mean, that's plenty enough profit margin there to take a decent trade on. You're looking at close to 3%, 2.88% on the gap fill, roughly. Cool. All right, so just a quick recap. Snapchat that's an all-time high play. We're looking for the move over 66. Boeing, we're looking for the move over 218. That's going to be a range break play. Hopefully the news doesn't cause that to gap down. If it does, we'll just take it off the watch list. And then PLTR, we are looking for the potential gap fill right there. Let's talk about some side charts. While I am doing that, guys, feel free to post up anything here on the chat section that you want me to review. I just ask that you try to format the review tickers like the watch list and give me a few levels that you think are significant, and then maybe a sentence or two why you think the stock may have potential. It just creates for better conversation. The first one is APHA. So this is a side chart because it's not really ready yet. I actually was putting this on the watch list as a short below 19, and a couple of times it had tested this price point but never really broke below. And so what we're starting to see form here is another range between about $19 and $22, give or take, 50 cents or so on the top side. So this is consolidating on lower volume. If this volume returns and this breaks out over like $22 or $23, this has really a lot of potential to move up fairly quickly. So keep those alerts set on APHA, but as of right now, it's only a side chart because it's trading. It's still trading within this range, right? So unlike Boeing, it's not trading at the top of the range, looking like it's about to break out. Like, it still has a little bit of room to go before it decides to move. So keep those alerts set. At $22 or $23 is that 23 would be a better confirmation, but I think 22 might work also. SPCE is another side chart. So they have there is earnings coming up on the 25th. That is something to keep an eye on. The reason why I want to alert or put this on your guys' radar, though, is because there is a chance that a stock, like we've seen it before, stocks will run in anticipation of earnings. Like, they'll run on the week of earnings leading up to it, and then from there, like after the numbers, decide what way it's going to move. I'm not saying it happens all the time, but this certainly has potential to do that. So here's your pullback, kind of bouncing here off of the 21 EMA, and it doesn't. I don't know if this is going to break out and continue to run, but it has potential to. So I want to keep alerts set either over. I mean, $52 feels a little tight. I'd probably say 53 is a better confirmation that you would be breaking the downtrend on this play for the move up. So keep alerts set at $53 on SPCE. The other two that I have for you for side charts are also earnings plays. So DKNG, I was charting this earlier. There's a big cup and handle forming here on the daily. So there's your cup, there's your handle, and typically this pattern breaks out like that, right? So after it pulls back, then you see this breakout move into the highs. But earnings is coming up, so it may not even break out until earnings, or it may not even break out at all, right? But there is a chance also, just like SPCE, that this decides to run in anticipation of earnings. So just keep your alerts set at $65. If it breaks that price point, leading up to earnings, then you might have a little bit of a run going up to or leading up to that report. The last one is SQ for this is for a side chart watch. So I only wanted to point this out because it's trading at the highs, and I'm not really anticipating a run into earnings because this one reports a couple of days earlier, right, on the 23rd. I'm not really anticipating a run into earnings because it's already up so much, but it can still happen, right? So maybe you want to keep your alerts set at 283 or 284 for the break into the highs, and you know, if we get a breakout, there's a potential play there also. So APHA is the side chart watch. We're looking for the range break. SPCE, DKNG, and SQ are all earnings plays. Of course, you always want to be careful trading something on the week of earnings because you know, the stock can move in crazy ways, especially if news is released early. And maybe the safer bet would be to wait until after they report, but you know, these are all presenting pretty decent setups, and to be honest, right now, I mean, there really is kind of a lack of setups in the market. So I just want to put it on radar. You know, they're potential plays. Make sure you do your due diligence on them and create your own plan. Cool. All right, so I'm going to go over some questions that you have, and hopefully, you know, maybe we got some good ones here. Bitcoin connection with Riot. What about it? I think that I mean, somebody was asking me about like Riot and MARA. I mean, yeah, look, if you're going to get into something like this, like the entry was down here, or you know, on these dips. I don't think that you should be chasing something like this up. Maybe like long term, it doesn't matter, but I wouldn't be buying up here. I own Bitcoin, and I wouldn't be buying up here. I'm actually selling a little bit, you know, and then like looking for the dip entry to buy back in. So I would wait on those. Adrian says, time to get back to work. Yep, I agree. So I was on vacation for a while, and man, it's a double-edged sword because I love vacations, but I also love what I do, and so I feel like I'm slacking whenever I'm gone and taking time for myself, because I know there are a lot of people that do depend on these watch list reviews, and you know, that's what I'm here for. I love helping out the community. So yeah, absolutely, time to get back to work. It feels good to be back. I will say that. Couple of earnings plays this week. Can we cover some of those? Yeah, so we did. And the ones that I would most be excited, or the ones that I would be excited the most about are PLUG, DKNG, BYND, SPCE, and NSQ. All of those are decent plays for earnings. Maybe even after they report, right? Not even trading them before, but like after they report, if they make some crazy move, like those are all decent day trading tickers, especially for options. SPCE, we already reviewed it. SQ, we already reviewed it. JMIA has, all of those have earnings this week, right? JMIA? Yeah, and then NVIDIA as well? No? Yeah, so all of those have earnings this week too. I don't really know what you want me to say on those. Like, the same thing would kind of apply, except for like I believe the spreads on NVIDIA for the option chain is it's pretty wide, so I'm not a big fan of trading NVIDIA. If NVIDIA starts to move, I would look for like a sympathy play on AMD. That's what I would do. So if you see NVIDIA like breaking out into the highs, you may see AMD, you know, the semiconductor, kind of follow suit as a sympathy play and start to move as well. That's also something to keep in mind if you're a swing trader as well, and like you own AMD, like you want to probably keep an eye on what NVIDIA does, or what they report for earnings. JMIA, I really like don't even see a setup here. I think that it's in the middle of the two price points here. It's in the middle of $50 and you know, we're in the highs here at like 67. So I would just wait and see. I'd probably wait on this one and see what it does. And then the other one you mentioned, SQ, we'd already talked about that one. Alex the Rookie said that CCIV has rejected at $65 on the daily chart and ended with a shooting star doji followed by a bearish engulfing candle pattern. All right, so if you don't know what that is, I will explain that to you. This is what I'm talking about right here. So CCIV, this candlestick right here is known as a shooting star. It's formed at the top of an uptrend. And basically what it's saying is that the stock price hit a high, met some sort of resistance, and the sellers brought the price all the way back down to here. You will have a longer tail on top with a shorter body on the bottom, and this is a potential reversal candlestick. It's only confirmed by the next candlestick, and for confirmation, you're going to want to see a new low. So you have formed next to it just that, a new low, and on top of that, this is a bearish engulfing candlestick pattern, meaning that the body of this candle has completely engulfed the body of this candle, which is also a reversal signal. CCIV has news right now with Lucid, and everybody keeps talking about it, and that news came out way back here. I don't understand really why people are just now mentioning it. I mean, that is the reason why this stock has been running up this entire time. This is a case that, I feel that this is a case of buy the rumor, sell the news. If you're just now hearing about this, you're like really late. So Alex is mentioning that this is probably a decent short opportunity. And I would agree. I would agree because look, the stock prices ran how much? This is like 500%. 549% in the past month and almost a half, month and a quarter. All right, so it's ran 500% in a month and a quarter on rumor news, not even actual news, on rumored news, and has two signals right here at the top telling you that there's a potential reversal. It's forming that over what? The $50 whole number. So you definitely have an opportunity to short this stock here below $50. Yes, great breakdown. I am not a short bias trader, so I probably wouldn't trade something like this, but the opportunity is certainly there. Thanks for bringing that up, Alex. All right, Franklin, I'm gonna skip this one because you just gotta send me some type of review, and I'll get to it. But this doesn't help me out much. Amazon 3250 at big support. Breaking that, it can go to 3,200. Yeah, so Amazon it had this big sell right here, which is pretty interesting. But I don't know that. I mean, I agree that it can come down to 3,200, but I don't know if it really breaks below that and continues to come down. Look at this big like pennant pattern it's been forming on the daily. I mean, it's been forming this pattern for a long time. So if you don't know why we do analysis on the daily chart or on the weekly chart time frame, I'm going to tell you the patterns or consolidation or ranges that you see on the larger time frames, such as the daily and weekly chart, they're stronger than any other time frame. Well, actually, let me rephrase that. The larger the time frame that you see a pattern on, the stronger that pattern is. And the reason being is because that pattern's been setting up for a longer amount of time. So when that pattern finally breaks out or breaks down, you typically will get a larger move based on the time frame that you're looking at. So for that reason, I don't know that Amazon breaks down right now below 3,200 because we're nearing that kind of support trend line right there. But I would agree that right now it's formed a lower high. It's broken this upward trend line here, and is trading at support at 3,250. So certainly if it can break that, the next level of support that I would see below is 3,200, and you're right on that one. So who mentioned that? Sharma mentioned that. Yeah, that I would agree. That is a and it's on higher volume too. That is a potential short play still. Facebook at 260, and so you're saying the same deal, right? This is also a potential short play. Sure, yeah. This has been, Facebook's been one that's kind of, I haven't traded this in quite some time because it's like, it's done a lot of this kind of chopping around, and so it's made it hard to analyze. But yeah, so here's your, this was kind of like your bearish, like your bear flag, most recently, bear flag formation, and then there's your confirmation breakdown. The 200 EMA is just below, so keep that in mind. A stock trading over the 200 EMA, that's that blue line, on the daily chart time frame is still considered to be in an uptrend. So keep that in mind, that while these stocks are like looking red most recently, like they're coming down right now, it is still over the 200 EMA, which means that the overall trend, you know, if we're taking into account all of this price action, the overall trend is still up. But yeah, the most recent trend is certainly down. All right, Tesla neckline break on the daily. Yeah, so I would agree. As long as Tesla stays below 800, I think it certainly has potential to come down. I would look for this to probably break this 50 EMA. So what is that, at 760? I would look for it to break below the low of this wick and break below that 50 EMA to come down. Probably it can come down to 700. There's not a lot of price action between where it's at and where it can come down to. And actually there's like there's like little gaps right here too. So this moved up really quickly, and that means it can come down just as quick, if not faster, right? So I honestly wouldn't be surprised to see that happen in one day if it really gets the momentum down. AMAT trading near the all-time highs, closed week on Friday, so looking for a possible gap fill. I'm reading that to 119, 116-ish. Okay, let's see what Brad's talking about here. AMAT. All right, so it's a post-earnings gap up right there, trading near the all-time highs. All right, so what I'm going to do is back this up. Okay, just to make sure that that is the, I probably should just go max available to make sure that that's the all-time highs, which it is. All right, so it's a post-earnings gap up. I'm going to move to the 5-minute just to see. It could not sustain, so it like pushed up and then really couldn't sustain that move, and it's kind of come back down. But it is still holding like the initial pop move up. So 118 is where I would draw my first line, and it's also this resistance and kind of like old support back here. All right, so we're going to go back to the daily chart and look at what Brad's levels were. So looking for a gap fill below 119 to 116, long over 121.5. Yeah, so a move over 121.5 would be that's possible. I think if you're going to do a long over 121.5, you might as well just move it down to 121. And here's why, because that 50 cents, like you might as well take advantage of that 50 cents profit margin if you're going to take an earlier entry down here. One thing that I talk about is, and like I actually have had a couple of people try to deject this theory, but the area where a stock breaks out or down from a pattern is a hidden level of support and resistance. So this is a symmetrical triangle that broke out, right? And actually this was like a dirty breakout because it faked out and then came down. That would mean that this level around 123 is a likely level of resistance before you even get to the all-time highs, whatever, 124.5. And that's just a wick anyway, so it's like not that strong of a price point. I feel like your short trigger placed at 119, it's like, so you're placing very tight trigger levels. So you're saying 119 and 121.5, right? Trying to like encompass this price action, which is fine. There's no problem with that. but you're trying to like take advantage of more profit margin, but you're taking on more risk by doing that, because there's a chance that if this falls or fails to hold 119 as a support, it could come down to 118. But then look, right, you have to take into account that pre-market data, and you also have to take into account all of this data back here, right? So you're basically limiting yourself on a $1 profit margin there, because you're saying a short below 119, well, it has a chance to bounce at 118, right? And it may not, I know it's a gap, but it may not fill that entire gap. So I would move this trigger down to 118 just to be like safer, right? To make sure that it's actually breaking this level and this level and this level, so that I have that extra confirmation that it does have potential to come down. And then I would probably leave my long trigger at 123. But if you're setting it at 121.5, I would just move that to 121 and then keep your other one at 119. I'm just telling you how I would do it versus what you're doing. So your method, you get less confirmation that the move that is happening is real, but you're taking advantage of more profits. I think my method has more confirmation, but potentially less profits. You'd have to be more patient and wait for the setup. There's no wrong way to really trade it. It's just two different methods. Oh, Justin said I have the best stock reviews that they have seen. Thank you. That actually means a lot. That's why I do these. A bull flag on NVIDIA, potential play above 605. Yeah, so Roman, we talked about NVIDIA having earnings this week. Yes, there may be a bull flag there, but keep in mind that fundamentals take precedence over technicals, and they will always take precedence over technicals. So no matter what A++++ setup that you see on a chart, if it has earnings, it doesn't really matter, because a stock can make crazy moves leading up to earnings. A stock can consolidate leading up to earnings. You just never really know. And so once those numbers drop, it doesn't matter if you have an A+++ setup and they report that they're going bankrupt. The stock's going to fall, right? So I wouldn't try to go too in depth with technicals on stocks that have earnings the week of, if that makes sense. Does Facebook look like a dip entry to me? No, it doesn't. Facebook does not look like a dip entry to me. I actually considered adding this to my long-term portfolio a while back, and I'm kind of glad that I didn't, because it hasn't really done much. I think that if it pulls back to like this 250 price point, or maybe 245, and starts to do what it did here, and here, where it bounced at those levels, we may be looking at a possible dip entry. There's still this gap area below right here that it has yet to fill, though. So I would be careful. If it pulls back to this price point and then fails to hold it as a support, this could potentially come all the way down to like 235, and then we're trading below the 200 EMA, which means that this is really no longer in an uptrend. It's kind of on its way down. But yeah, as of right now, this doesn't look like a dip entry to me. So I haven't bought into it. I did consider buying into it on my long-term portfolio, but me personally, I'm just gonna wait and see what it does. If it looks like a dip entry to you, though, there are methods that you could utilize to scale into this stock at different times, so that you can like bring down your cost basis, right? So you would basically be, it's not necessarily averaging down on a losing trade. It's averaging, it's like scaling into a position that you plan to hold for a longer period of time. I did that with Tesla on its way up. and on its way down. Right, so I had been buying into this like at different times, kind of manipulating my entry price prior to like this massive run right here, and wound up with a pretty decent cost basis on the stock. So as long as you plan it out properly, you know, you can consider that dip right there an entry, because, you know, who knows, maybe it doesn't come all the way down. Maybe Facebook does not come all the way down to 245, right? And then you're mad at me because I said it's not a dip entry. If you feel like scaling into a position and you like the stock and you believe in them long term, or you know, whatever it is, then by all means, you know, do whatever it is that you think is right for your plan. But I would use caution. You know, you don't want to catch. There's a term called trying to catch a falling knife, and that is what this looks like to me. Like, this looks like it's just now breaking down. I wouldn't be surprised to see that breakdown continue a little more. Okay, we had a couple here on BIDU, so let's talk about BIDU. Does it look good for a continuation? Sure. Yeah, this is one of those plays that's crazy, man. $346. I mean, I remember when this was way down here. Yeah, I mean, it is into the highs, and sure, it looks good for a continuation. That is definitely one that, oh wow, that's really clean price action too. That's definitely a setup that I look for. The option chain doesn't look super favorable to me, at least. That's why I didn't mention this one. But yeah, I mean, this is pushing into the highs. Like, it's super easy analysis. You're going to look for a long over. I would be careful because 350 is overhead, right? That's going to be your next whole number. But I mean, the way this thing's moving, it could easily blow right through 350 and continue up. So as of right now, you'd be looking for a long over like 346. You know, and maybe even a price target of 350 in mind, and then readjust your levels right there. Okay, I'll do 3 more. So I'll do Etsy, I'll do Neo, and then I'm going to do QS. Okay, and we'll call it after that. So Etsy. On the daily chart time frame, this is actually a really healthy trend. I like to see something like this where it's not parabolic, but it is up, right? And this is a good example of stocks moving in waves. So up, down, up, down, up, down, up, down, all the way up. The only thing is that it has earnings. So what did you even mention about this? It may ride like pins, possible sympathy play. I don't think I don't know. Maybe. It is kind of like a social media stock, but not really. I mean, Etsy's kind of like e-commerce too. You know, that's a tough one to say. Well, you know, who would be this? What would be the sympathy play for Etsy? I think that your best bet from where it's currently trading at would probably be to just wait until after earnings, and then decide to take a trade on it from there. Neo, yeah. So this one, I don't really have much of an opinion on Neo. Earnings is coming up. There is something to be said about it trading right here at the 50 EMA, because look, it's been treating this 50 EMA as a support all the way up, and this could be, this could arguably be like a pretty aggressive sell. I mean, one of the more aggressive sell-offs that we've seen, probably with the exception of this is one of the more aggressive sell-offs that we've seen on this stock, especially recently. So it's trading at support, that being the 50 EMA. Below that, it does have this whole number support at $50. I don't know. Maybe it's due for a recovery. It is the first stage to a trend change is consolidation, and so that's what you have right here is consolidation. So there is potential play here over maybe $56 or $57. Thank you for bringing that up. So I'm going to set an alert over 57 just to kind of be on the safe side. And that's going to tell me that, hey, this is bouncing off of the 50 EMA and has, you know, potential to be a possible reversal here. But as of right now, I think you'd be, oh, it is up after hours too. As of right now, though, it's kind of like a guess, you know. All right, and the last one that I mentioned that I would do would be QS. So this one we actually traded this one on this day here, and it was a 100% gainer that we had called out in chat for that breakout move there. And then since then has just continued to move sideways, right? It actually had like a little bit of a sell. But this is not necessarily bearish. I mean, the sell is kind of happening on lower volume, and it's still maintaining this $60 number as a support. So I just wouldn't be surprised to see this bounce around in this range for a little bit before continuing up, if it decides to continue up at all. I would keep alerts set at probably $65, $66, maybe even $68, and just know that the high up here is at 72. There is a gap, a nice gap there on the daily once it gets up to about $75. We will absolutely be looking to trade this stock when it gets there because that gap runs from 75 up to about 85. You know, we're looking at a $10 gap right there. And look at this. Look at these moves that it makes. I mean, it has big pop potential if it can get the momentum behind it, but it's got to get that momentum first. So the first step is to continue to maintain $60 as a support. Step 2, you want to see it break like $65 or $66, kind of breaking this consolidation and pushing back up to these highs. Step 3, you want to see it break 75, and that's going to be the money play when it breaks 75 and gets into this gap area. I think we'll probably see that fill that gap in one day. Who called that out? Amar. Yeah, thank you for putting that on radar. That's a good one to end this stream on. So all of that information, make sure you write that down, set your alerts on QS, and be prepared to trade it when that time comes. Cool. So guys, I'm going to try to do, since I took a vacation for a little bit, I'm going to try to do these live streams a little more often than I have been. So I'm looking at maybe doing a midweek live stream and then another live stream at the end of the week. And then, you know, we'll look at three live streams a week, maybe 4 for a couple of weeks. I want to try to make up some of that lost time that I didn't spend with everybody. So thank you for your time tonight. I hope that the information I've put out has helped out. Remember, the market is still ranging. /ES is still. It actually kind of looks like it's coming down here. We're still in this general area of range. So don't force any trades. You know, if we're coming down and breaking support, try to be with trade with the direction of the overall market. So you don't necessarily want to be long on something if the overall market's coming down. You always trade with the trend. The trend is your friend. On the flip side of that, if we're validating this as support and bouncing, you want to be long on the bounce on the way up. So keep an eye on /ES or SPY as you trade, whichever one you prefer, especially if you're trading these larger cap tickers. Okay. I will see you all in the morning. I'll have the exact trigger levels posted on the watch list then. Again, thanks for your time, and have a good one.